What if I told you that the IRS will give you a tax break whether you invest in a 5,000-year-old metal or a digital coin that didn't exist 15 years ago? That's not a trick. That's a gold IRA versus a crypto IRA, and right now, people are choosing between them without fully understanding what they're actually signing up for. Same tax wrapper, completely different animals inside. Today I'm going to break down the tax advantages of each, expose the real risks most people overlook, and help you figure out which one, if either, belongs in your retirement strategy. Stay with me, because this decision could cost you or make you a lot of money down the road. First, a quick foundation so we're all on the same page. An IRA, individual retirement account, is a tax-advantaged account the government created to encourage you to save for retirement. You can open a traditional IRA where your contributions may be tax-deductible now and you pay taxes when you withdraw, or a Roth IRA where you contribute after-tax money but your gains grow completely tax-free. The thing is, the IRS has a list of what you're allowed to hold inside an IRA. Stocks, bonds, ETFs, that's the default. But through what's called a self-directed IRA, you can hold alternative assets, like physical gold or cryptocurrency. That's exactly what a gold IRA and a crypto IRA are, self-directed IRAs holding non-traditional assets. And that one word, self-directed, means you take on a lot more responsibility. Let's talk about what that looks like for each. Let's start with gold. A gold IRA lets you hold IRS-approved physical precious metals. We're talking gold, silver, platinum, palladium, inside your retirement account. The tax treatment is identical to a regular IRA. Traditional gold IRA, tax-deferred growth, Roth gold IRA, tax-free growth on withdrawal. Now here's what a lot of people don't realize. The IRS is very specific about what gold qualifies. It has to meet a purity standard of at least 99.5%, so American Eagle coins are in. And here's another thing, you can't just put the gold in your safe at home. The IRS requires it be held by an approved custodian and stored in a certified depository. That means extra fees, custodian fees, storage fees, sometimes insurance. Gold has a centuries-long track record as a store of value. It tends to hold up, or even rise, when markets crash and inflation spikes. For retirees or near retirees who want stability, that's very appealing. The case against? Gold doesn't pay dividends.
Now let's talk crypto. A crypto IRA works the same way on the tax side. You get the same traditional or Roth tax treatment. And that's actually where the magic really happens, because cryptocurrency, held outside an IRA, is a tax nightmare. Every single trade is a taxable event. Gains are subject to capital gains tax. Frequent traders can rack up enormous tax bills just from swapping one coin for another. Inside a Roth crypto IRA, you could theoretically watch Bitcoin go from $30,000 to $300,000 and owe zero in taxes on withdrawal. That's not a small deal. That is a massive deal. Most crypto IRAs support Bitcoin and Ethereum at minimum. Some platforms support dozens of altcoins. Speaking of risks, let's be honest. Crypto is volatile in a way that gold simply is not. Bitcoin has dropped 50%, 70%, even 80% in a single cycle. There's also regulatory risk. And the fees, trading fees, transaction fees, platform fees, can add up fast on an asset class that already swings wildly.
Both share the same tax advantages as any IRA. Both require a self-directed structure and a specialized custodian. Both come with higher fees than a standard brokerage IRA. The difference is entirely about risk tolerance, time horizon, and what you believe about the future. Do you believe the global financial system will face stress and people will flee to hard assets, gold? Do you believe digital assets will reshape finance and have a decade or more to wait out the volatility? Crypto.
Before you decide anything, here are 3 things to lock in. 1. Neither gold nor crypto IRAs are set and forget. They require active management, higher fees, and personal research. If you want hands-off retirement investing, a low-cost index fund IRA is probably the right base. 2. If you're considering a crypto IRA, a Roth structure is almost always preferable. The whole point is sheltering gains from taxes. Paying taxes up front and watching those gains compound tax-free is the real power move. 3. Neither of these should be your entire retirement plan. Most financial advisors suggest treating alternative assets like these as a portion, maybe 5 to 15% of a diversified retirement portfolio. not the whole thing. And of course, talk to a licensed financial advisor and a tax professional before making any moves. This video is education, not personalized financial advice.